see traders making the same mistakes over and over again. And these mistakes will kill your trading performance. These mistakes will actually hold you back forever until you fix them. But what if I told you they were actually easy to fix? If you keep making the same mistakes over and over, they'll keep you stuck in the learning loop for years. I know this because I was in the same place myself 8 years ago. I was stuck, unprofitable, frustrated, and most importantly, down a lot of money after 4 long years in the market until things started to click. But I had to make these fixes in order for things to change. But once I fixed these mistakes, I started winning more trades, I instantly became profitable, and I started making 5 to 10% a month consistently 4 years running now. I hit a win rate of over 50%, going for a 1 to 2 risk to reward ratio now. Trading just one pair, using one strategy, and trading for 1 to 2 hours a day max. So that being said, let's not waste any time and get straight into it. So these are the 7 trading mistakes that you need to fix now. The problem is that these mistakes absolutely destroy your performance on the charts. But there's an easy fix to every single one of these. The first mistake that people make is trading without a plan. Trading without a plan is basically trading blind. The last thing that you want to do is not have a plan in place. A plan that not only makes you confident to take a trade, that is based on data, profitability has been proven through backtesting and through data over multiple periods of time in all market conditions, but you've actually got a plan after you take a trade of how you're going to manage that trade and how you're going to get out of that trade. You can't just think you're doing everything right or do everything right up until you take a trade, because that's when it's easiest. You haven't actually put your money in the market yet. As soon as you put your money in the market, the emotions come. If the emotions are there, things can start to go very sideways very quickly, and we should not allow that to happen. So, trading with a plan throughout, from when we place a trade to when we're in a trade, and then after we close the trade. Having a strict set of rules around all of this. Super important. The fix is to have a step-by-step strategy written down, of course, that covers top-down analysis, entry and exit rules, and risk management. So, here's an example of my strategy. First, identifying higher time frame supply and demand zones and overall bias. Refine the zones and structure on a lower time frame, 4 hour and 1 hour. Mark out all the liquidity pools and confluence areas. So liquidity pools will be equal highs, equal lows, supply and demand, support and resistance, Fibonacci zones. We all know that liquidity lies in those areas. So that's why I mark all of that out on my chart. After that, I will drop down to the 15-minute time frame. I'll wait for a liquidity sweep and a reaction at my zone. Again, I'm not trading with the herd here, I'm going against. So if I notice that we are bearish on market structure, that we've done a 61.8 retracement in the current range, that we've done a 15-minute maybe bearish breaker structure as well, that we've had price tap into a supply. If I know that a lot of traders are going short right now, that's my cue to buy. And what I do is I actually drop down to the 1 minute, wait for a breaker structure or a reaction from say a supply zone, for example, and I will enter a buy instead of a sell, targeting their stop losses, go for a fixed TP at a 1 to 2 risk to reward ratio with fixed risk of 1 to 2% of my account balance. Of course, my stop loss is placed with enough room that makes my trade invalidated if it does go in everyone else's direction. And of course, then after that is the most important part. How do you manage that trade? So manage trade per my plan. I move to break even after a key structure break or after a 1 to 1 risk to reward ratio, but usually after the next high or low has been reached as well. After a 1 to 1, never before. Of course, you can take partials, log results. For me, this is just an example, but for me, I do not like to take partials. I will close my trade usually around that 1 to 2 level, completely in full. So, number 2, a lot of people ignore higher time frame structure. So higher time frame structure is super important. We should never ignore that because it's a key to where price is looking to go next. So I'm going to take you to the chart now for an example. So this is gold. I'm on the 4-hour time frame. Now, a lot of people might be selling here. They might see big bearish push into a supply, another bearish push into a supply, another bearish push followed by another internal push. But what they are failing to see, let's jump quickly to the weekly time frame here, is that we are tapping into, time and time again, a weekly resistance zone. 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, 6 touch, 7 touch, 8 touch. So while structure is bearish and we're tapping into a higher time frame resistance zone, this is an even better confluence that we're going to get a huge push to the upside, take all of that liquidity out, and that's the move that we want to catch. We want to be in that trade because that's when everyone else gets stopped out. So that's when we get the biggest push, the biggest move, and the best opportunity for us. Because during these ranges, when everyone else is selling, there's going to be a massive opportunity to not only just catch one trade, but lots of different trades, all while they're getting stopped out left, right, and center. We're not. We're taking advantage of that. Absolutely beautiful opportunity for us. 3 is trading without a confirmation. This goes without saying, guys. You can't just enter a trade based on you think price is going to do what it's going to do. This goes for not only my strategy, but any strategy that you're trading. If you haven't got a confirmation to enter, or multiple confirmations and confluences stacked up is definitely more important than having just one. But if you don't have at least a confirmation that's telling you to enter a trade, never enter that trade. Be really strict in your plan and really strict in your rules to not break them, and ensure that you're trading with full confidence, knowing that you have the confirmation to take the trade. And that's what you should always look to do. Never trade without confirmation, because then you're just simply guessing and anticipating that this might happen. Wait for your last confirmation. Maybe it's a structure break. Maybe it's a reaction from your zone. Then we can enter. That's how we should always look to tackle the markets. We should always wait for that confirmation to take a trade. Number 4, moving your stop loss too soon. I see this all the time, or not at all. I'm going to show you in the charts exactly what I mean here. Now let's say we took a buy here. This is a random, this is not a valid trade, this is completely random. Let's say we took a buy here and we were looking for price to come up into, let's say, this level here. You can see our stop loss is placed below the low. All right, great. So people that move their stop loss too early or not at all. For example, they get into this trade, they see price has a little bit of a push up, and then what they do? Break even. Oh, I'm scared. Move my stop loss to break even right here. After they move their stop loss to break even, they get stopped out. What does price then do? Rockets to the upside. Now, at this point, you would either be closing the trade in full. Great. What is that? Risk to reward wise, depending on your strategy, that might be suitable. Or you might be looking to go up here. You might be closing half of it. Depends on your strategy. Again, this is not my strategy. This is just a random trade example to show you of how people can close trades too early. In this case, you've gotten scared. You've looked at your MetaTrader or whatever trade platform you're on, TradeLocker, SeaTrader. You're seeing that, oh my God, I'm up $4,000 here. I'm going for a 20 grand trade. I'm up I'm so scared though, I'm gonna close this. So you move your stop loss to break even, you get tapped out, price just taps around at break even once more, then rockets to the upside. Now here you could be taking some partials off. If not there, then definitely up here. And again, where do we, if we are managing this trade properly, when are we moving to break even? Well, depends. You could move to break even after this big push here. So again, we're moving to break even. You can see stop loss is now moved at break even, meaning that we can't lose money on this trade. If price comes back and taps into break even, great, $0 lost, no problem. But you can see after that, it actually spikes to the upside. So the problem here is, again, this trader has done the right thing. You have a choice now, you can close the trade, you can make some money on this trade, perfect. What if you don't move your stop loss at all? Because you're just thinking, oh, but if it might tap back in and then go higher, what happens next? Remember, this guy could have made money somewhere here, could have already made money, or he could lose nothing, but instead the fear came in. Oh, but what if it taps into stop loss and then rockets straight to my take profit? I'm gonna make so much more money. And then the fear sets in. If they don't move the stop loss, what happens? Price rockets through, goes straight for that stop loss. So what could have been a winning trade, at the very least a break-even trade, has now becoming a losing trade, just because you don't know when to move your stop loss. So move your stop loss, be confident in that choice, And of course, use it to protect your capital. Don't put it there and then wait, see you're trading a nice profit. Don't put it there and take it off just in case it comes back and goes your direction again. Don't try and predict the markets. The markets will do what the markets do. 9 times out of 10, you move that stop loss, you're gonna get stopped out. It's an interesting thing that whenever we do this, the lesson gets taught to us, and I think that's it's a good thing in a way. Overtrading. Overtrading will kill your account. Do not, and I have rules for this, so I'm gonna tell you how to fix it. But when it comes to overtrading, this will destroy you. If you're taking a prop firm challenge, you're likely losing your challenge due to daily drawdown. 9 times out of 10. Why? You can't accept the loss. You can't accept the loss, you want to make it back. If you can't make it back on the first trade, you want to make it back on the second. You will continue to trade to try and make back those losses, but you're not trading anymore, you're gambling. You're completely gambling now. You don't have a proper plan in place. You don't know what you're doing. You might be taking multiple trades, revenge trading. These are very bad things that you do, but I have a fix. And what I do to avoid overtrading is I'm only allowed to take 1 trade per session. So if I'm trading the London Open or the New York Open, which I trade 1 hour of each, I like the New York better. If I'm trading the London Open and the New York Open, I'm only allowed to take 1 single trade. But what that actually does is it makes me really patient for that trade. So I know I'm taking a good trade based on my rules, which has all the confirmations for me to take that, and I can enter with confidence, knowing that if it's a loss, it's a loss. If it's a break-even trade, break-even trade. If it's a win, it's a win. But I only get to take 1. So I have to be very patient, and this obviously stops the overtrading issue. I don't have to take another trade. So many times I would take a trade, and then I would lose or break even because it would be an early trade. Because knowing as well that you can take multiple trades, you'll take one that's early just in case you get that push in your direction, right? And you may or may not get that push, but then that's going to allow you to take another trade. Then you could be 1 loss, 2 losses in and still looking for another trade. Again, this was a very bad habit of mine. Once I cut this out, my trading went through the roof. So again, the fix to all of this is only trade when all the confluencing conditions in your strategy align. Always remembering that quality over quantity will always win. Now 6, not understanding liquidity. As I explained to you in a chart example before, there's a ton of liquidity left on the charts. Could be a supply zone, support and resistance. Could be Fibonacci areas. Could be a lower high when people are looking for sells. Market structure could be bearish. Again, so many areas of liquidity. Could be breakout zones. Again, liquidity lies on the charts. We can see how that gets manipulated day in and day out. And that's something that I'm going to teach you guys through all of my videos as well, is how to actually spot the manipulations, how to take advantage of that and go all the way, the opposite way to what everyone else is doing and actually make a ton of money doing that. And number 7, guys, is changing your strategy too often. Now, I get it because you're trying to find what works. You don't really know what works for you until you try it. However, what I really recommend you should do, find a strategy that aligns with you. Keep in mind, guys, the markets have changed. Smart money concepts used to be a very high profitability strategy before everyone started trading it. Then everyone started trading it. And then obviously the markets adjusted to that. And now they see bearish structure. They see 1 minute break at a supply zone, 1 minute break at a demand zone. It's triggering a lot of buyers in the market, guys, and we can see it visually on the charts. 9 times out of 10, stop out, stop out, stop out. Support and resistance, stop out, stop out, stop out. Why? What do they know that we don't? It's not what they know. It's just a simple fact of the markets have changed. Now we need to understand how it works as a machine, where the market participants are getting in. If they're all getting in at the same time, high probability trade entry for us. Not to take a trade with them, but to go against them. But of course, guys, you need to stick with 1 single strategy. 1 single strategy that's profitable, that you are aligned with, that makes sense for you. And then, guys, just stick with that for 1 or 2 years and you will see you will become a complete beast in this game and you will really do some amazing things. But guys, if you want to learn how you can stop second guessing every entry that you make, finally hold trades with confidence, knowing why you're in and where you're going, and trade with a repeatable plan, not emotion or guesswork, join the Currency Squad, my education platform, the best education platform in the world. Free course is down below in the description. But guys, thank you so much for watching this. If you liked it, make sure you like, comment, and subscribe, and I'll get back to you with another video very, very soon. Thank you.